In this video, we're going to develop the process costing report using the weighted average method. Recall from your introductory financial accounting course that there are 3 methods to value inventory. For inventory items which are unique, meaning they are not interchangeable, IFRS requires the use of the specific identification method. For inventory items which are interchangeable, IFRS allows a choice, either FIFO, which is the first in, first out method, or the weighted average method. In this video, we'll focus on the weighted average method applied to process costing. Note that in a manufacturing environment, the cost of a product includes direct materials, direct labor, and manufacturing overhead. However, for purposes of determining the cost of inventory in a process costing system, we combine direct labor costs and manufacturing overhead costs into one category called conversion costs. That's because these 2 costs are used to convert direct material into finished goods, hence the name for this combined category, conversion costs. Keep that in mind as we move through this video. As always, demonstrating the process costing report using the weighted average method is best done through an example. Cookies Inc. manufactures chocolate chip cookies, which they sell to grocery stores. The manufacturing facility has 3 departments: mixing, baking, and packaging. Note that for purposes of this video, we will be focusing on the mixing department only, the very first department. You have been provided with the following unit and cost data for the mixing department. We've got a chart with description and units/dollars. Physical units, work in process inventory, opening April 1st, 18,000 units. Direct materials, 100% complete. Conversion costs, 35% complete. Units started in production during April, 187,000 units. Units completed and transferred out, 180,000 units. Work in process inventory, April 30th, 25,000 units. Direct materials, 100% complete. Conversion costs, 20% complete. Costs. Work in process inventory, April 1st. Direct materials, 100% complete, $19,500. Conversion costs, 35% complete, $30,700. Cost of work in process inventory on April 1st is therefore $19,500 plus $30,700, which is $50,200. Costs incurred during production in April. Direct materials, $52,250. Conversion costs, $311,550. Total costs incurred in April is $52,250 plus $311,550, which is equal to $363,800. First, we're using the weighted average method, so there is information provided which we do not use. Let's get rid of that information first, so it reduces the chances that you'll use the information in error. When we use the weighted average method, we do not use the percentage complete for the opening work in process, so we strike through the percentage complete for those opening inventory physical units. Direct materials, 100% complete. Conversion costs, 35% complete. We also don't use the percentage complete for the opening work in process inventory costs, so let's strike that through also. Now we have the information that we need to complete the process costing report under the weighted average method, which we will be doing using a step-by-step process. Step 1 is to calculate the physical unit flow. What does that mean? It means we have to understand how many incomplete units there were at the start of the period, and we have to understand how many units were started during the period. We'll do that by using Excel. We need 5 columns: description, physical units, direct materials, conversion costs, remember, that's direct labor and manufacturing overhead combined, and then finally, total. We start with units to account for. This is the number of units we had at the start of the year, plus all the units we started during the year. To determine the number of units we have to account for, we start with the work in process inventory, in units, from April 1st. These are the units which were incomplete at the start of the period. From the question, we know the number of units incomplete at the start of the period was 18,000 units. So we input 18,000 units in column B under the physical unit heading. Note that this is not equivalent units. Instead, these are the actual physical units which were incomplete on April 1st. We then need to add in the number of units we started during the period. We get that information from the question also. Units started in production during April was 187,000 units. We place that under column B, physical units, again, 187,000 units. Adding together the units at the start of the period with the units we placed into production during the period, we determine that the total amount of units that we have to account for in our process costing report is 18,000 units plus 187,000 units is equal to 205,000 units. These are the total number of units that we have to account for at the end of the period that we just went through, the month of April. We now move on to step 2, calculate the equivalent units of production. We do that at the end of the period, in this case, April 30th. At that point, we need to ensure that we have accounted for the same number of units at the end of the period that we had at the beginning of the period, so we use the heading Units Accounted For. On April 30th, we have completed and transferred out units which have been fully completed and transferred into the next department. From the question, we see that of the units we had to account for, the 205,000 units, a total of 180,000 units have been completed and transferred out into the next department, the mixing department. So we place 180,000 units as completed and transferred out under column B, physical units. What do we know for sure about these units? We know that for direct materials, we have added 100% of the required direct materials to these units. How do we know that? Because these units have been completed in the mixing department, so 100% of the direct materials have been used in producing these units. So, for these units, which are completed and transferred out by April 30th, we know that 100% of the direct materials have been used. Therefore, under column C, direct materials, we take the 180,000 physical units and we multiply them by the percentage complete, 100%. This will allow us to determine the equivalent units. In this case, the equivalent units are equal to the physical units because all of the units are complete. 180,000 multiplied by 100% is equal to 180,000. Similarly, on April 30th, 100% of the conversion costs have already been used in the mixing department for these units. So 180,000 units multiplied by 100% complete is equal to 180,000 units under the conversion cost column, column D. Remember, what are we doing here? We are determining the equivalent units, and if all of the units have completed the mixing process, then the physical units and the equivalent units are equal to each other. On April 30th, we have work in process inventory at the end of the period. These are units which are incomplete at the end of the period. How many physical units do we have on April 30th? From the question information, we know that on April 30th, there was 25,000 physical units on hand. These physical units were 100% complete with regards to direct materials, meaning that all of the direct materials have already been added into the production process for the mixing department. However, conversion costs, which are direct labor and manufacturing overhead, are only 20% complete. We can now use this information to determine the number of equivalent units for the ending inventory. First, we enter the number of physical units, 25,000 units at April 30th. Because 100% of the direct materials have already been added into the manufacturing process, we calculate the equivalent units as 25,000 ending work in process units multiplied by 100% complete, which is equal to 25,000. We place 25,000 under the direct materials column, column C. For the conversion costs, we know from the information in the question that they are only 20% complete for conversion costs. Therefore, we calculate the equivalent units as 25,000 physical units multiplied by 20%, which is equal to 5,000 units. That means that 25,000 incomplete units are equivalent to the value of 5,000 completed units for conversion costs. We now add all of the units to account for in all three columns: physical units, direct materials, and conversion costs. From column B, physical units, 180,000 units, which have been completed and transferred out, plus 25,000 physical units in ending work in process inventory are equal to 205,000 physical units. That makes sense because the number of physical units at the end of the period must equal the total units to be accounted for. If these two amounts are not equal, you have done something seriously wrong. Now we calculate the equivalent units for direct materials. Because the direct materials are 100% complete for both the completed and transferred out units and the work in process inventory units at April 30th, the total is the same for the physical units, 205,000 units. That's 180,000 plus 25,000 units. For conversion costs, the total is only 185,000 units. That's because the ending work in process inventory at April 30th is only 20% complete for conversion costs. So 180,000 units completed and transferred out plus 5,000 equivalent units for ending work in process inventory is equal to 185,000 equivalent units. Now that we have the total amount of equivalent units for both direct materials and conversion costs, we have to determine the cost per equivalent unit. That means we are moving on to step 3, calculate the unit production costs. To do that, we first have to determine the cost we have to account for. This is similar to what we did for the physical units, where we started with the units to account for. Here we start with the costs that we need to account for. We start with the costs that were incurred last period from the opening work in process inventory, the inventory which was on hand on April 1st. This is again a copy for what we did when we determined the units to account for. We see from the question that direct materials were $19,500 and conversion costs were $30,700 for a total of $50,200 of costs. These are the costs which we incurred last period and were transferred over to this period as the costs incurred for the beginning or opening work in process inventory. Note again that we do not use the percentage complete for the weighted average method. We use the total amounts, but not the percentages. We enter $19,500 under column C, direct materials, and $30,700 under column D, conversion costs. In addition, we now include the total costs incurred under column E, $50,200. We now have to add in the costs incurred during April's production, costs that were started in the production process during the month. Again, we are copying the same process from the units to account for. The costs incurred during production in April are direct materials of $52,250 and conversion costs of $311,550 for a total cost incurred in April of $363,800. We transfer that into our spreadsheet. Column C, direct materials, $52,250. Column D, conversion costs, $311,550. And column E, total, $363,800. We can now determine the total cost to account for. We add the costs incurred for the opening work in process inventory and the costs which were added during April. Again, this is similar to the total units to be accounted for, only with costs this time. This duplication really helps you during tests because you can basically repeat the process from the units for the costs. Add in column C, direct materials, $19,500 plus $52,250 is equal to $71,750. That is the total direct material cost for April's production. For column D, conversion costs, $30,700 plus $311,550 is equal to $342,250, which is the total conversion cost for April's production. Total costs for the month are $50,200 plus $363,800 for a total of $414,000 of costs for the month of April. To calculate the cost per unit for both direct materials and conversion costs, we're now going to take the total costs and divide it by the number of equivalent units for each column. Using the headings cost per equivalent unit, we calculate this for both direct materials and conversion costs. To calculate the cost per equivalent unit for direct materials, we take the total cost of the direct materials, $71,750, and divide it by the total equivalent units, 205,000. 71,750 divided by 205,000 units is equal to 35 cents per equivalent unit. That's what the direct material cost per equivalent unit is. To calculate the cost per equivalent unit for conversion costs, we take the total cost, $342,250, and divide it by the total equivalent units, which is 185,000 units. $342,250 divided by 185,000 units is equal to $1.85 per equivalent unit. That's what the conversion costs per equivalent unit are. Now that we have the cost per equivalent unit for both direct materials and conversion costs, we can move on to step 4, prepare a cost reconciliation schedule. In this schedule, we determine the cost of the units which were completed and transferred out, but also the cost of the ending work in process at April 30th. Similar to when we determined the units accounted for, here we start with costs accounted for. Again, similar to when we determine the units accounted for, we start with the completed and transferred out costs. For the direct materials, we take the equivalent units of 180,000 units and multiply it by the cost per equivalent unit for direct materials, 35 cents per equivalent unit. 180,000 units multiplied by 35 cents is equal to $63,000. That's the cost of the direct materials used in the production of the 180,000 units which were completed and transferred out. Again, notice the similarity with the units accounted for, only this time you're multiplying by the cost per equivalent unit instead of the percentage complete. For the conversion costs, we take the equivalent units of 180,000 and multiply it by the cost per equivalent unit for the conversion costs, $1.85 per unit. 180,000 units multiplied by $1.85 is equal to $333,000. That's the total of the conversion cost used in the production of the 180,000 units which were completed and transferred out. Again, check out the similarity with the units accounted for. Only difference is the cost per equivalent unit instead of the percentage complete. We now have to do the same thing for the work in process inventory, which was on hand at April 30th, using the cost per equivalent unit. Notice again that this is similar to what we did when we determined the units accounted for. For the direct materials, we take the equivalent units of 25,000 units and multiply it by the cost per equivalent unit for direct materials, 35 cents. 25,000 units multiplied by 35 cents is equal to $8,750. That's the cost of the direct materials used so far in the production of the 25,000 physical units which were still in the production process on April 30th. For the conversion costs, we take the equivalent units of 5,000 and multiply it by the cost per equivalent unit for conversion costs, $1.85. 5,000 units multiplied by $1.85 is equal to $9,250. That's the total of the conversion cost used so far in the production of the 25,000 physical units which were still in the production process on April 30th. We now determine the total costs accounted for, similar to when we determined the total units accounted for. For column C, direct materials, $63,000 plus $8,750 is equal to $71,750. Notice something important? This is identical to the total cost to account for. In fact, if these numbers are different, you've done something seriously wrong. For column D, conversion costs, $333,000 plus $9,250 is equal to $342,250. Again, notice that the total for the total cost to account for is equal to the total costs accounted for, as they should be. If we now add the completed and transferred out for the direct materials and the conversion costs, we get $63,000 plus $333,000, which is equal to $396,000. This is the total amount which will be transferred to the next department, work in process inventory, baking. We can also add the value of the work in process inventory for the mixing department at the end of April. $8,750 plus $9,250 is equal to $18,000. This will be the balance in the work in process inventory mixing count at April 30th. Add these amounts together, $396,000 plus $18,000, and we get the total costs accounted for, which is $414,000. Notice that this must be equal to the total cost to account for. If it does not equal, remember, you've done something wrong. Go back and start again. Remember that we have to move the completed and transferred out to the next department in the manufacturing process, which is the baking department. The entry to move the costs of the cookies from the mixing department to the baking department is to debit work-in-process inventory baking and credit work-in-process inventory mixing for $396,000, the total that was completed and transferred out of the mixing department. We would then record this purchase in the T accounts as a debit to work-in-process inventory baking and a credit to work-in-process inventory mixing for $396,000. Notice that the past entries to the work-in-process inventory mixing account match our process costing report. Opening costs of $50,200 at April 1st, additional costs in April of $52,250 for direct materials, and $311,550 for conversion costs. In addition, the ending balance in the work-in-process inventory mixing matches to the process costing report. $18,000 is left in this account for the 25,000 physical units which are incomplete at the end of the period, April 30th. That's it for the process costing report for the mixing department. Notice that the structure of this report is only for the first department in the manufacturing process, which in this case is mixing. The process costing report for the baking department will include transferred in costs from the mixing department, which increases the complexity of the report. But that's a topic for a future video. As always, thanks so much for watching.